Hello and welcome in. Before we jump into things today, please take a quick second to like and subscribe.
Yeah, please do.
It really helps us out, and it ensures you never miss any of our future explorations. Today, we have a highly relevant discussion lined up for you.
We really do.
Our mission today is to look closely at two specific, highly impactful pieces of legislation. They are currently moving factually and smoothly through the government right now.
Right.
We're talking about House Resolution 6644. That one is known as the Housing for the 21st Century Act.
Yep.
And also House Resolution 7141, which is the Affordable Housing Guarantee Act.
Exactly. And our sources for this discussion are the definitive materials on the subject.
Straight from the source.
Right. We're pulling directly from the official legislative text, the committee reports, and the roll call votes from the Library of Congress.
For the 119th Congress.
Right. Covering the 2025 to 2026 session.
Okay, let's unpack this. We will start with House Resolution 6644. The motivation laid out in the committee reports is just crystal clear.
Oh, absolutely.
This is a massive, multi-pronged effort. It's sponsored by Representative Jay Frenchill, a Republican from Arkansas, and is designed specifically to increase the supply of housing in America.
Yeah, that is the core goal.
But I'm curious about the actual momentum here. You know, we see a lot of proposals, but where does this specific resolution actually stand?
Well, the probability of this passing is incredibly high.
Really?
Yeah, the official roll call votes show massive bipartisan support. It already passed the House on February 9th, 2026.
And what was the vote on that?
It was a staggering 390 to 9 vote.
That is massive.
Yeah, and just yesterday, March 2, 2026, the Senate invoked cloture on the motion to proceed with a vote of 84 to 6.
So it's moving fast.
It is. It also has 31 bipartisan co-sponsors, so it's advancing factually and steadily through the legislative process.
Those are some very definitive numbers.
Mm-hmm.
So looking at the actual text, why is this specific bill pulling in that kind of overwhelming support?
Well, when you analyze why this bill is so important, you realize it's because of its highly systematic nature.
Mm-hmm. Meaning it's not just a Band-Aid.
Exactly. It doesn't just authorize a blank check or throw federal money at a housing crisis hoping for a quick fix.
Right.
Instead, it systematically addresses the actual regulatory bottlenecks. It targets local zoning frameworks, cuts through environmental review red tape, revamps rural development programs, and alters how housing is financed.
So it's hitting every angle.
Yeah, by addressing the structural rules, it aims to stimulate supply right at the foundational level.
Which brings us to the efforts to cut through that red tape. One of the direct actions mandated here is the abolishment of the Regulatory Barriers Clearinghouse.
Right, just getting rid of it entirely.
Yeah. The resolution actively seeks to clear out older regulatory structures to make way for new state and local zoning frameworks.
What's fascinating here is the specific mechanism they are using to speed up development, especially regarding the debates around what is called NEPA streamlining for HUD.
NEPA being the National Environmental Policy Act.
Exactly. Usually securing NEPA clearance means a very lengthy period of paperwork and environmental impact studies.
Right, which slows everything down.
Right. But under this resolution, the government is creating categorical exclusions.
Basically fast pass.
Yeah. It lets builders skip the traditional environmental review process entirely if their project meets certain criteria.
And what exactly are those criteria? Like if I'm a builder, what kinds of projects suddenly get to skip that line?
The exclusions apply heavily to infill projects.
Yeah.
Those are developments on vacant or underused lots in already established neighborhoods.
Where the environmental impact is already pretty much zero.
Exactly. They also apply to the conversion of existing office buildings into residential units and the development of up to 4 scattered site dwelling units.
So if you're a developer looking to turn an empty downtown office building into apartments, or you just want to build a small 4-unit structure on a vacant city lot, this resolution clears the path for you.
It completely clears the path. You don't have to spend years tied up in environmental impact reports.
That seems like a massive win for speeding up construction.
It absolutely accelerates the timeline, but naturally there are debates surrounding this approach.
Because of the environmental risks.
Exactly. The debate is about whether streamlining environmental reviews creates new risks for the people who will eventually live in these homes.
Are we bypassing safety for speed?
Right.
Yeah.
And the legislation acknowledges this debate directly. It mandates a specific Government Accountability Office, or GAO, study.
What are they studying?
They are tasked with determining exactly how many residential units and public housing projects are currently located less than 1 mile from Superfund sites.
Oh, I see.
Yeah, so while they are accelerating the building process, they are simultaneously trying to measure the environmental exposure risks associated with bypassing those traditional reviews.
Here's where it gets really interesting. The bill doesn't just strip away existing rules. It actively incentivizes entirely new ways of thinking about construction.
It really does.
There's a section detailing an accelerating home building grant program. This offers financial grants to local governments and tribal entities to create what are called pattern books.
Pattern books.
Yeah, basically these are catalogs of pre-approved housing designs.
Right.
If a builder chooses a design from the local pattern book, their building permits are expedited. It's almost like ordering a house off a menu.
Where the city has already pre-approved the recipe.
Exactly.
The pattern book concept is a major shift in urban planning, but it's accompanied by another highly specific architectural guideline that has generated considerable debate.
Which one is that?
The bill mandates federal guidelines to facilitate the permitting of point-access block buildings.
Point-access block buildings.
Right. To translate that from architectural terminology, these are residential apartment buildings up to 6 stories tall that only have a single internal stairway.
Wait, hold on a second. A single staircase for a 6-story building. That sounds like a complete fire hazard. Standard building codes usually require at least 2 staircases just in case one is blocked by a fire.
You're hitting on the exact center of the debate. It's a massive change, and the discussion balances fire safety considerations against construction costs and housing affordability.
So,
Requiring 2 staircases in a building takes up a significant amount of valuable floor space. That requirement restricts how many apartments can fit on a given floor, dictates the shape of the building, and drives up the overall cost of construction.
oh, I see. So by moving to a single stairway model, developers can build smaller, more affordable apartment buildings on much smaller city lots.
Precisely.
But what about the safety aspect? Does the bill just ignore the fire risk to save money?
Not at all. The bill instructs the Secretary of HUD to coordinate with the International Code Council to incorporate these single-stair buildings into the International Building Code.
Okay.
But they must carefully evaluate compensating factors. Things like advanced sprinkler coverage, pressurized stairwells, and enhanced smoke detection are analyzed to offset the egress concerns.
So it's a highly calculated trade-off.
It is.
That is a fascinating balancing act. And speaking of costs and trade-offs, we should look at the financial impacts of House Resolution 6644. Where is the money coming from to fund these grants and modernization efforts?
The financial mechanisms are very specific here. For example, the bill introduces new rules allowing Community Development Block Grant, or CDBG, funds to be used for the new construction of affordable housing.
Which is a change from how it used to be.
A major change. Previously, these funds were heavily restricted when it came to building completely new structures. Now, localities can use up to 20% of their allocated amounts specifically for building new units.
Wow. Okay. I mean, that is a substantial shift in funding allocation.
Yes, and that funding reallocation is paired with some direct budget cuts elsewhere. There is a $115,000 reduction to the discretionary surplus fund.
So they are moving capital from surplus accounts directly into active, on-the-ground housing programs.
Exactly. This is especially evident in the provisions for the USDA Rural Housing Service. The legislation acknowledges that this specific agency requires technological modernization and mandates an assessment of the costs to update their outdated systems.
And there's also the rural housing repair loan.
All right.
Okay.
Yes, it directly doubles the maximum amount for rural housing repair loans, taking the cap from $7,500 up to $15,000.
Which is incredibly practical. Because let's be honest, anyone who has tried to fix a sinking foundation or put on a new roof recently knows that $7,500 barely covers the contractor picking up the phone to say hello.
True.
That jump to $15,000 is finally catching the program up to the reality of modern repair costs.
It's a very tangible benefit for rural homeowners. Another major financial and regulatory shift concerns manufactured housing.
Right, the chassis issue.
Yes. The resolution explicitly brings manufactured homes that are built without a permanent chassis into parity with those built on a permanent chassis.
Why does the chassis matter so much?
Historically, manufactured housing has faced severe zoning and financing hurdles, specifically because of that chassis requirement, the metal frame that makes the home transportable.
I see.
By legally stating that homes built without that permanent chassis must be treated the exact same legally and financially as those with one, the government is opening up the market.
It removes the local zoning stigma.
And the regulatory barriers. It allows these factory-built homes to be financed and placed just like a traditional site-built house.
So we've talked about developers getting environmental exemptions, rural homeowners getting bigger repair loans, and the manufactured housing industry getting a regulatory boost.
Right.
But let's shift focus to exactly who else gets affected by these bills on a daily basis. I see there's a whole section on small dollar mortgages.
Yes. The resolution establishes a pilot program for FHA small dollar mortgages. These are defined as mortgages with a principal balance of $100,000 or less. It authorizes direct payments to lenders to incentivize them to originate these smaller loans. Typically, banks find these smaller loans less profitable to bother with, which locks out buyers trying to purchase lower-cost homes.
That makes total sense.
Okay.
And what about the renters?
The bill establishes a nationwide eviction helpline to provide counseling for renters. It also creates a temperature sensor pilot program for federally assisted rental units.
To ensure landlords are actually maintaining safe, livable conditions during extreme weather.
Exactly.
All of these programs seem incredibly targeted toward a very specific slice of the population.
They are. They share a common focus on what the legislation strictly defines as workforce housing.
Workforce housing.
Right. The text explicitly defines this group in its mandate for a GAO study. Workforce housing is defined as middle-income households making between 80% and 120% of the area median income.
This is the squeezed middle class.
Yes. They make too much money to qualify for traditional low-income federal housing assistance, but they do not make enough to comfortably afford skyrocketing market-rate homes.
So the resolution is actively trying to identify the unique obstacles this specific group faces.
That is the goal.
And we know that middle-class squeeze also heavily impacts our veterans, which brings us perfectly to the second bill in our stack of sources today. House Resolution 7141, the Affordable Housing Guarantee Act.
Right.
This one is sponsored by Representative Mariannette Miller-Meeks, a Republican from Iowa.
Yes.
Where does this bill stand in the legislative process right now?
It's slightly earlier in the process than the massive omnibus-style bill we just discussed. It was forwarded by the Veterans Affairs Subcommittee by a voice vote on February 24, 2026.
Got it.
And while House Resolution 6644 is a sprawling, comprehensive piece of legislation, House Resolution 7141 is laser-focused.
How so?
It directly benefits veterans by fundamentally altering the maximum VA home loan guarantee.
How does that guarantee work currently, and what exactly does this bill change?
Under current law, the VA generally guarantees 25% of a home loan for a veteran.
Right.
This bill changes the mechanics entirely for veterans with a service-connected disability. For those specific veterans, the guarantee jumps from 25% to 50% of the loan.
A jump to 50%. That is a massive shift in purchasing power for a disabled veteran trying to compete in today's market.
It changes the math completely. When the government guarantees half of the entire loan, the risk to the private lender drops significantly.
Right, the banks feel much safer.
Exactly. This means disabled veterans will have a much easier time securing financing. They will likely have access to much better interest rates, and it drastically increases their ability to compete against all-cash offers or massive corporate buyers in a tight housing market.
That is fantastic.
And we can actually connect this right back to the first bill we discussed.
How so? Do the two bills overlap?
They do. House Resolution 6644 also contains specific provisions to aid veterans. It mandates that certain disability benefits received by a veteran from the Department of Veterans Affairs must be explicitly excluded from income calculations when determining their eligibility for HUD housing assistance.
That is a great connection. So across both of these resolutions, we see a unified legislative effort to ensure that disability compensation doesn't end up penalizing a veteran when they are trying to secure affordable housing or a mortgage.
Precisely.
It is genuinely fascinating how these seemingly separate pieces of legislation interlock to address the same crisis from different angles.
I really do fit together.
But there is one section of House Resolution 6644 that seems a little out of place when you first read through it. Title VI focuses heavily on community banks. Why is banking regulation sitting right in the middle of a housing bill?
If we connect this to the bigger picture, it makes perfect economic sense.
Okay, walk me through it.
Local housing development relies almost entirely on local community banks. Large multinational banks often rely on automated algorithms to approve loans from a headquarters hundreds of miles away. Those algorithms can easily overlook the nuance of a local market or reject a unique small-dollar building project. Community banks, on the other hand, do the localized relationship-based lending that actually funds neighborhood development.
So how does the bill protect those smaller banks?
It streamlines the examination cycles for well-managed banks and credit unions that have under $3 billion in assets.
Under $3 billion.
Right. By reducing the heavy regulatory burden of constant audits on these smaller institutions, it frees up their time and capital to actually lend money to the people trying to build or buy homes in their specific communities.
That makes a lot of sense. The banking section also includes a major debate regarding something called the least cost exception.
Yes, this is an important part of the bill.
The sources outline that when a bank fails, the Federal Deposit Insurance Corporation, or FDIC, is generally required to resolve the failure in the way that costs the insurance fund the least amount of money. But this bill changes that rule.
It does.
It explicitly limits the FDIC from selling failed banks to global systemically important banking organizations.
That is a critical regulatory shift with massive long-term implications. The effect of this provision is that the government is officially prioritizing the prevention of massive banking monopolies over finding the absolute cheapest immediate buyer for a failed bank.
Even if a massive global bank offers the cheapest resolution to buy up a failing community bank.
Right. The FDIC is instructed to look for other alternatives. Concentrating too much financial power in a few global entities is considered a greater systemic risk than taking a slight financial hit to the deposit insurance fund.
It's a protective measure.
It's a protective measure to ensure that local mid-sized banking options survive.
Because if the local bank survives, the local credit line survives, and the local housing market keeps moving.
Exactly.
So what does this all mean? When we step back and look at the sheer scope of these legislative sources, it is clear that they're attempting to pull every available lever to fix the housing crisis.
They really are.
They touch literally everything. We've gone from the regulatory audit schedule of a local community bank to the specific architectural requirements of a stairway in a new apartment building, all the way to the percentage points on a disabled veteran's mortgage.
It is a sweeping attempt to rewrite the operational code of American housing. The text shows a government trying to balance rapid development with environmental safety, fire codes with construction costs, and localized banking with systemic financial stability.
And that is exactly why you should care about this, regardless of your current living situation.
Absolutely.
Whether you are a renter worried about eviction and the heating in your federally assisted unit, or a middle-income earner looking for that newly defined workforce housing, or a disabled veteran getting ready to use your VA loan to buy a home, these resolutions directly impact you.
They impact everyone.
The definitions, the financial mechanisms, and the structural rules governing your local real estate market are actively being rewritten by these documents right now.
The structural rules of the game are fundamentally shifting, and the impacts of those shifts will be felt by anyone who interacts with the housing market, which is to say, absolutely everyone.
I want to leave you with a final thought to mull over. Something that builds on everything we have discussed today.
Okay.
If the government successfully funds these pre-approved pattern books for home designs, and if they successfully alter the zoning laws to allow for single stairway buildings across the entire country, it will not just change the economics of American housing.
What else will it change?
It could completely reshape the physical architectural look of our cities for the next century. Imagine a future where, instead of diverse, chaotic urban sprawl, neighborhoods nationwide begin to share a recognizable, pre-approved aesthetic.
That is a fascinating thought.
The buildings in a town in Arkansas might look exactly like the buildings in a town in Oregon, all born from the same expedited, federally encouraged pattern book. It is a fascinating visualization of how policy becomes physical reality. Thank you so much for joining us for this discussion of the sources. We really appreciate you taking the time to explore this with us.